Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another Velocity Banking review. So, what is Velocity Banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of something called the line of credit. And you essentially make your line of credit as your main operating account. But before we start the review, let me go ahead and flex about all the lines of credits that I got, right? Got lots of lines of credit. In fact, I have 26 lines of credit that equal up to $494,000 in limits. Let me go ahead and zoom in there. Whoa. Whoa, look at that. Business credit cards, personal lines of credit, personal lines of credit. Look at 215,000 personal lines of credit. And then a $280,000 home equity line of credit. And I'm going to tell you the secret that a lot of people don't really take seriously. But if you want to get lines of credit, here's the secret. Okay, here's the secret. Banks, oh, that's small. Banks don't lend money to people who need it. And when you understand that secret, then you'll able to get tons of credit. But too many people don't understand that secret. Okay. And if you even if you don't understand it right now, just memorize it. Just memorize it. Banks don't lend. I didn't even put lend. Lend money to people who need it. Okay. That's how we get lines of credit. Now, well, let's actually get into the velocity banking strategy. So as you can see right here, ooh, we're in pain because we need money, right? Let's take a look here. $12,000 of income, $13,000 of expenses. Now, I know some of you are looking at this and you're thinking, man, this is really unrealistic. Who makes $12,000 of income? Did you know that 90% of the people in this country can't even get a mortgage? So even getting a mortgage is unrealistic. But since we're all about debt and debt payoff, who do you think banks like to lend to? Rich people or poor people? They like to lend to people who have money and then they stop lending to them when they need money. Get it? And the other thing too is that we're not for realism in this channel. I don't really care whether something's realistic or not, because if something were realistic, I wouldn't have paid off my mortgage in 2 years and 9 months. It's not, right? So, yeah, this is just, let me just show off here and flex a little bit here too. But yes, banks don't lend money to people who need it. And if you need money, they won't lend it to you. And the reason why people think that a bank will lend them money when they need it is because of all the commercials that banks have that essentially lie to them, which is, we'll be there for you when you need us. And that's a total lie. Okay. Banks don't lend money to people who need it. That's the secret to getting all these lines of credit, like this beautiful, beautiful $280,000 line of credit, home equity line of credit. All right. So let's go back to the budget. So only two things needed for velocity banking. Number one is a budget, and then number two is a line of credit. Okay, but when we do our budget, we have to list every single expense that we have, all the credit cards, the auto loans, and heck, maybe we were a doctor, right? $200,000 student loan, $400,000 quote modest house, and $3,500 of general expenses. In fact, this is not $367,000 of debt. Let's go ahead and pay it off as possibly a doctor. Do doctors even make 12 grand a month? I don't even know. And this is after tax, right? But the whole point of this is that even though we have the same income and the same expenses, we're just going to redirect the flow of money and then we're not going to save it, right? Because as a quote rich person, or when we have the rich person mentality, saving money is bad, right? Because we saving money is kind of like stale water. It should be used to something, whether it's actively paying off debt. Okay, we actively pay off debt or we actively invest. And in this scenario, we're going to actively pay off debt. And we're going to assume we have some an access to something called a line of credit. And heck, let's actually use my home equity line of credit as an example, right? As an example. So this $280,000 fresh, brand new line of credit that we'll never get if we're stuck. And the warning to you is that you need to get it before you ever need it, right? So this line of credit is almost like this insurance policy. Like you don't want to get an insurance policy with after you crash a car with no insurance. You want to get the insurance policy before you start driving. The same thing with credit. Banks don't lend money to people who need it. If you need money, you're a giant risk, right? That's how over $594,000 in lines of credit should be more than 600,000 soon. We'll get there. Okay, we'll get there, and then so we'll get to a million. Okay, all right. So let's go ahead and do this. So let's assume we have this beautiful 7.5%, $280,000 line of credit, and let's add up how much credit card debt we have. Right. So we got 5 credit cards. 5, 30, 35, 33, 34. Now, if we sum up the credit card debt, that's $137,000 of credit card debt. So let's move $137,000 of credit card debt. And guess what happens? Oh my goodness. These credit cards, they just go to zero, 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 zero. How do we get from negative $1,000 to positive $3,000 in an instant? Oh my goodness. Must be magic, right? Or I must be scamming y'all or pulling a fast one. Anyways, so one of the things that you might be asking is, well, how do you know if you have all this debt, which ones to move into the line of credit? Easiest way to figure out is using something called the cash flow index. I didn't start using it until random people started sending me their spreadsheets like these, and they had like 15 to 22 debts, right? And I was like, there's so much debt here. And then I decided, whoa, this is a really easy formula that the internet told me about, or was it the internet? I don't remember where I found out about it. To figure out which debts to pay off first. So what you do is just take the balance, okay? You take the balance and then you divide it by the minimum monthly payment. So it's 5,000 divided by 175, right? And actually, we'll just do this, 30,000 divided by 950, right? And then this one is 35,000 divided by 1137.5. This one is 33,000 divided by 1045. And then this one is 34,000 divided by 1076.67. And then this one is 45,000. Actually, I got this all figured out right here in this loan calculator. All right. And then we see right here, okay, so let me make this a little bit spiffier. So it's going to do this. So not sort, not, what am I doing? Number, right? Okay, so basically think of this as a ranking system. And you want to pay off the lowest ones first because you get more bang for your buck in terms of cash flow. So, for example, would I pay off this $400,000 mortgage to get $1,900 back in my cash flow, or this 34 grand credit card debt to get $1,000 back in my cash flow, or these two, which is more than the mortgage, right? So you get more bang for your bucks. That's why we move the credit cards first because they have the lowest cash flow index. So you just kind of do this and move it to the line of credit. And then the final step, okay, so the final step is you put your entire paycheck, this entire $12,000 into that line, okay? And then you take your expenses out and then your cash flow decrease that line of credit or the balance of the line of credit. And then you rinse and repeat over and over again. And luckily, I got so much credit and lines of credit that this strategy I can just do today. Okay. So to get the next month's balance, you get the previous month's balance, previous month's interest, subtract the cash flow, 3043.13. And then what you do is you take the average daily balance, multiply by the interest rate, which is 0.075. And then you divide that sucker by 12 because it's monthly. And we're going to go ahead and pay off all this credit card debt. So let's go ahead and do it and pay off that credit card debt. And then you see that in 53 months, okay, 53 months. Let's go ahead and highlight this. All right, so 53 months, it is completely paid off. 53 months. All right, so let's go ahead and go right here. So how much is that? 130, so 53 months 137K. All right, let's go ahead and do that. Five credit cards, not bad. And now we got this loan calculator to help us figure out what's going on with our loans. And look at that. Okay, look at that. These loans are almost dead, so we're just gonna get rid of them. Okay, so we're gonna go ahead and do G2 plus G3, and that's 8 grand. So let's get rid of that 8 grand in loan debt, auto loan debt, and we're gonna do that right here. And then this is gonna be plus 8453.03, and then now what we do is just do 0, 0. And now we have $4,000 of cash flow. Okay, so I'm going to copy and paste this. $4,000. This is going to be 4268.17. Okay, and then we see that in 2 months, bam, it's gone. All right, sweet. Okay, I love it. All right, so 55 months. Now those 2 auto loans are gone completely. And then so now it's 137 plus 45 plus 21. Then that's 203K of debt gone. Okay. And then now it's time for the student loan and the mortgage. So at 55 months, where are we with that? 0, 0, 55, 55. Oh, not 555, 55. And then now let's go ahead, okay, and start paying off the student loan. So I'm going to move this student loan into the line of credit. I'm okay with it because the interest rate is very similar. But if you have a huge interest rate difference and you got that big cash flow index number, moving that loan into a line of credit is a no-no, right? So let's go ahead and move that student loan into the line of credit. So it's going to be 125 grand, which is going to be right here, 225 grand. So it's going to be plus 125,323.14. And then our cash flow here has been updated to 0. We got an extra 2 grand in our cash flow. Whoa, it's 6 grand now, 6.5. So let's go ahead and defeat this sucker. And this is now going to be 6590.34. And let's see what happens here. And all right, so now that in 76 months, we got it all paid off. All right, so 76, not bad. Not bad. So 76 months equals 203 plus, so that's 403K. 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 And how much is 76 minus 55? That's about 21 months. Okay, so 21 months, that's a little bit less than 2 years. So let me go ahead and do this. Let me ask ChatGPT, okay? If a doctor were to pay off a student loan in 21 months, so we'll say, I mean, it's technically not 400K. How much was it? It was about 125. So yeah, 200, 125 in 21 months. Let's see what ChatGPT says, okay? ChatGPT. If a doctor were to pay off a, let's see, right here, 125K of their student debt in 21 months, how would the doctor's colleagues react to this? Let's assume the doctor used Velocity Banking but didn't mention it by name.
The doctor's colleagues would likely have a mix of reactions depending on their own financial perspectives and experiences. Here's how different groups might respond. 1. Amazement and curiosity. Many would be impressed and curious about how they managed to pay off such a large sum in just 21 months. Some might ask, how did you do it? Or did you come into some money? 2. Skepticism and doubt. Others might be skeptical, assuming the doctor must have had outside help, a high-paying side hustle, or sacrificed a lot of their lifestyle. Some might think, That doesn't seem possible unless they're living like a monk. 3. Envy and comparison. Those struggling with their own debt might feel envious or even frustrated, wondering why they can't achieve the same. They might say, I must be doing something wrong if they can pay it off that fast. 4. Dismissiveness and assumptions. Some might assume the doctor had no other financial responsibilities, e.g., no family, mortgage, or major expenses, dismissing it as unrealistic for most people. 5. Respect and inspiration. Colleagues who admire financial discipline might be inspired and ask for tips. They'd see it as a major achievement and might say, That's amazing! Teach me your ways! Since the doctor didn't mention velocity banking by name, the discussion would likely revolve around aggressive debt repayment strategies, budgeting, and financial discipline. If someone were familiar with velocity banking, they might recognize the signs and ask if that's what was used.
That's where we are. We did some amazing things. So now this is 0. And then now what month are we at? So this is going to be month 76. Where are we today? This is going to be so 76, $350,000 mortgage. And luckily we got the velocity banking calculator for this one. Because in this scenario, we're going to do chunking, meaning we're just going to take a piece of the loan and move it to the line of credit. Because why? And I'll just quickly demonstrate why. And let's go ahead and do this. What's the interest rate of the mortgage? It is 4%, 30. Current balance is 4, or original balance. And then the current balance is 350,245.04. 350,245.04. And then the payment amount is 1909.66. All right. And then this is the chunk. What's the chunk amount? I don't even know. Oh, yeah. It's just income. All right. So we'll say $12,000 chunks at 7.5% interest rate, $12,000 of income. What's our expenses? It's everything except for the loan we're trying to pay off. So it's $3,500. And then paid off in 3.8 years. Not bad. 3.8 years. Okay. So 76 divided by 12 plus 3.8, 10 years debt free, right? 0. Obviously, we could have got there sooner if we decreased this to, I don't know, $2,000 a month. But we're a doctor. Let's live it up, right? We got that $200,000 student loan, so let's make it worth it. But all the other doctors that they will not believe you. Skepticism and doubt. Now, if I were a smart man, I would just create the medical velocity banking group or velocity banking for doctors, because then I know they'll have the money to pay me. You know what I mean? But yes. All right. So yeah, that's it. So that's it for today. And before we end, let me just go ahead and talk about how we got those lines of credit. Just a reminder that banks don't lend money to people who need it. And that's the secret to getting lines of credit. They don't lend money to people who need it. $594,000 of debt. Okay. Right? You got that? All right. Well, hopefully you did, because I like to repeat myself a lot. In fact, I make the same video over and over again, and over and over and over and over and over and over. Okay. All right. This is Korean Atlanta Mentorship. Have a great day, and I'll see you on the next video.